Shay Newton with Financial Journey here. Today we're going to talk about tax planning. So, what is tax planning? And really, it's about forward looking. Okay, so when you do your taxes for the year, so for example, we're going to prepare our 2021 taxes in the year 22, but it's based on the calendar year of 2021, right? So that's backward looking. When you're doing your taxes, there's nothing you can change about what happened. It's already done. So tax planning is really, knowing what your situation is and making strategic changes during the year. So here's some examples that kind of explain that. So let's say you have self-employment income. Okay. One of the retirement plans available is called an individual K. But there's multiple, self-employment retirement plans. But the individual K has to be set up by December 31st. Well, if you're looking at your taxes and preparing them and you're like, you know what, I probably should do an individual K contribution, for that year, you can't because you didn't set that plan up, in the previous year. So that's one example. Another is charitable deductions. So with the Tax Cuts and Jobs Act, the standard deduction is much higher now. So that means you've got a larger hurdle to take the itemized deductions versus the standard, and there were some limitations on the itemized deductions, like, the state income tax is limited. So one thing here is looking at your tax situation for the year and seeing like, all right, am I going to be able to itemize this year? Am I not? And maybe what you could do is say, you know what, this is how much I want to give to charity each year. Let's do it all at once and put all of that deduction into a donor advised fund. And then, I can, still give to the charities that I want to give to over the next few years, but I get to take the deduction or add it to my itemized, deductions, and maybe actually take itemized deductions versus standard. Another one is if you're over age 70 and a half, then you can do a qualified charitable distribution. And what that means is it never even comes into your income. So instead of paying it out of, your checking account where you may or may not get a deduction, you can pay it directly from your IRA with, over 70 and a half and never bring it into income. Okay, another one is if your retirement plan withdrawal strategies. Okay, so that is, taking money from your retirement accounts. And let's say during the year, you've got some major medical expenses and you have to go into a nursing home or something in May and you've got extra care. So your medical expenses are really high. Well, maybe you would switch where you're taking money from different accounts because you know that you're going to, be able to have a big deduction. So let's take some more from the IRA that's 100% taxable versus a different account that's more tax favorable. So those are things that tax planning incorporates. It's knowing your situation, throughout the year and different things that are going to impact it and making choices and, decisions based on that. So head over to the blog because I've got a few more examples in there of what tax planning is. But really the gist of it is, being able to make strategic decisions during the year versus, doing your taxes and not being able to change anything. So if you have any questions, let us know and head over to the blog to check out some other examples. Thanks, guys.